Alright, so this is the 12th weekly forecasting series that I do. I do a video every week just to give you a bit of directional bias for what I'm looking for within the Forex market. So I'll go over the dollar index, usually go over the EURUSD, GBPUSD, sometimes have a look at some stocks and gold. Just everything really. Some things that show up in the week. We'll go through some fundamentals if they are important, and we'll go through the technical analysis of what I'm seeing and what I'm looking for moving into the up and coming week using what I already know. So starting the video on a weekly chart, if we just hide these drawings right here, we can see as we've been pointing out, the dollar has traded much lower all year. So we were expecting some sort of movement back up towards the equilibrium of this range high to low. So this would be around here. So we've had this run on sell side liquidity and then some displacement away, which have been marked out for the past couple of weeks. There's nothing sort of interesting about this. Now, if this was a blank chart, you know, maybe you wouldn't at this point, if you're watching, I don't know what level you're at, you might not be able to see what I'm seeing with this, but if I put the drawings on, this adds a bit of confluence towards what I'm sort of looking at. So we had a monthly low here. We've been over this every single week now. I run on this, displacement away on the daily chart, fair value gaps that we've returned to, retracement, traded away, targets here, monthly high, and this now has shown that the monthly high target that we've been looking at has been tagged, has been hit, which just shows that price within this area has delivered perfectly. And I hope, you know, these videos sort of gave you guys some extra confluences and analysis in order to capitalize on that. So moving forward now, in order to give some sort of confidence, I'm going to remove these drawings because we've been over this week on week and we've hit this monthly high, and I feel like it's just a lot on the chart. So if you want to screenshot it or sort of annotate your own charts for your own analysis, then please do so. But if I remove this now, we'll go on to a monthly time frame. I want to mark out this. We have ran this monthly low, which is the low that we've keyed off. And if we're moving external to internal all the time within ranges, then I expect the next monthly target to be this fair value gap here. Drop down to a weekly time frame, we can see that that would exactly be about equilibrium of this range where there's some liquidity here, there's some buy side liquidity. We've ran this low, we've displaced higher, and we've opened the month now of November. Around Monday was the... So I will mark that out there. So that's months open. So just to sort of give some context on this, if we go back to the monthly chart, all we're expecting early on in the month now, we're on the 9th of November as I'm recording this, is some sort of manipulation, which where would I then gauge this manipulation to either end or stop? Now I expect this low to stay intact as we come from this volume imbalance right here. So that's a graded swing. We mark that from high to low, low to high, sorry. This area in price I would not expect to go. So in order to formulate a trading idea, I mean, I don't trade the dollar index, I'll just flip this around for other pairs, but I would go something like this now. So I'm expecting manipulation to be within this area right here, and then I expect another leg of price to sort of go in order to tackle this monthly target right here, even though it's a long time away. The one thing I would like to mention as well is the fact that we are now in November, and if you look at seasonal tendencies, we usually do see that the markets will reduce their sort of injections of liquidity going through December and January. There's less volatility within the markets. People start pulling liquidity out of the markets. There isn't much in order to drive price and deliver big moves. So sometimes you have to pair that time with the price aspect, even though this looks good. If we can get this sort of early on in November, then I'll be happy to take this shot. But as we start to go towards December, it's definitely worth starting to slow down your ideas, expecting high runs. For example, this run on this low come in September, so we knew that we had a lot of the year left and a lot of volatility to sort of have an idea that these highs were going to get kicked, as we've marked out literally week on week. since August. We've sort of nailed this run, nailed that low. We even did it on not USD sorry, USD CHF, I believe. Yeah, we nailed that. We hit this low, FOMC come out, then we knew that was a sort of reversal point, perfectly marked out. So pair the time, pair the price aspect with it, and we should see protraction early on in the week, next week. If we can get that, then I'm happy to go for a higher dollar. However, if that doesn't come, then I'm not going to be looking to get into this idea at sort of December time, because that's when I want to have a bit of a break from the market, as if you backtest any previous data, it's usually not the most favourable. So pairing that with the which pair to choose, the Euro GBP has been quite consolidated, and then we had this sort of explosion right here, which led to some real GBP USD weakness compared to the Euro, which I've already marked out this optimal trade entry on the Euro. However, GBP USD does seem to be really weak, so I would monitor this fair value gap right here, this order block fair value gap, see if we can get some displacement away from this area. If we start to reject from this early on in the week, then maybe GBP USD is going to offer the more favourable shorts again. However, with Euro GBP, we always seem to have some sort of range bound price action. It's very choppy a lot of the time, so I would just I would monitor the fact that this might just be a run up and then we could just come straight back down. So usually I tend to go with the Euro, as it's more correlated to the dollar index, which is good for a trading idea. As if you're trying to, I'm really trying to trade the dollar and then just pick the inverse of whatever's happening on the dollar through the Euro or the GBP USD. So that's sort of how I tackle that. Looking at other pairs, there's not really much that interests me. If we go to the USD JPY, we have this marked out right here, which is a institutional. Well, it didn't quite get there on the daily time frame, but that's a graded swing in price, because we've sort of down close candle, then displaced higher again, creating a fair value gap, mitigation block and order block, which could have been a good idea. We reacted from this fair value gap down here. However, with the dollar index showing an OTE right here, I would sort of just focus on the Euro and the GBP USD. There's no point in trying to pick a headache with other pairs. If you've got something on Euro or you've got something on GBP USD, I'll always favour that over the other pairs, just as that's always been my bread and butter when looking at trading setups. So I'll only sort of look at other pairs, CHF, JPY, CAD, if there's something not really being offered on Euro and GBP USD, as they're the main correlation that I tend to trade with. Looking at gold, yeah, we've had some relief on gold. I'd still be, if you look at the year, we've just sort of made the low, high and closed. So this could be coming back now just to close, ready for a new year. But I mean, there's a couple of down weeks. Everyone that's saying that there's going to be like some relief on gold. This could just be a retracement to build up some liquidity to then send it higher. So I would still expect gold to trade higher, especially whilst there's sort of economical problems of stagflation within the US economy. S&P500, again, all-time highs. It's now becoming more and more weighted on Nvidia's earnings and all of the tech companies' earnings. So as that becomes more and more weighted, then the earnings of the major companies have more of an effect, as it's higher, as anything with a higher weighting towards a few individual stocks, then they will have more of an impact in the long term. So definitely, if you trade in the S&P 500, I'd always look for all-time highs, because it always makes all-time highs. It just trades up and up and up. Don't be the person that's trying to catch the ultimate high of a range. Always just look to sort of trade and wait for your setup to be in line with what the market always does, which is make all-time highs here. And then I would just monitor, if you're thinking, what news events can I monitor, what can I look at in order to sort of have a better analysis with this and sort of back it up with some fundamental research. Just look at the earnings of the top companies. That'll give you some direction on what you should be looking at and how heavily weighted it is towards those tech stocks. Anything's tech in America is likely going to bring some volatility within this market, just as it always has done. Then bringing up the calendar If we have a look at the calendar, now we have had government shutdown from the US economy. I think we're now in the longest time we've ever had it. Actually, it's been over 40 days, or if we are in the 40th day, something like that. So again, when you don't have new data, big funds and big institutions can't make decisions as there is no data. So therefore, I would also, going into December, if we still don't get any data, I would definitely expect the markets to show some sort of slowdown in volatility. Definitely manage expectations of what you think the market can give you. If we're having no data and we're having seasonal tendencies anyway, then usually that will just lead to a very, very slow market. So just sort of have a break, have a holiday through December and January if the price action isn't showing you your setups and it's not being very volatile. So going into this, I expect once we do come out of the shutdown, we will have a lot of change, because once we get some employment data and inflation data back, I presume there'll be a repricing towards what the data is currently showing. So if we see that the job market is getting better now because we've had some more basis point cut, we've cut interest rates basically, so we should be seeing that data is getting better. However, if we see that the job market continues to be pretty bad, then I would expect some sort of volatility within this. So just keep an eye out for the data reports. I don't think we're going to get any though this week, just through the shutdown, but just sort of monitor that. I'll always go through the calendar, as a lot of the point of this video is to help you sort of gain a better interest into what you should be looking at week on week and how you should build an analysis. So I've always been going over the calendar, even though the data points might come, just to how you would pick your days intraday if you were to trade them. So Monday I would let go, just because it's a Monday and the data isn't, the news reports aren't that good. We've got ISM manufacturing PMI, which wouldn't really bother me too much. I'd wait till Tuesday. Again, no data points, so I'd expect that Monday to sort of be the manipulation within the week, and then I would expect Wednesday to really start being the drivers of direction, especially with ADP. Sorry, this is the week that's just gone actually. So ADP come out. That was a bit higher than usual. I'll just go through this exactly how I'd do it anyway. Then Thursday we would have the not much USD data, so I wouldn't really be bothered about that. And then Friday, the prelims. So I'd be looking to trade the Friday and the Wednesday mainly as the directional bias. If we go to next week, up and coming, we have no news for USD and no red folders on the Monday, so I'd leave that. Tuesday, again, very, very quiet day. It's a USD bank holiday. I would just avoid bank holidays altogether intraday. It just always seems to be choppy price action or unexplained runs. However, you can't really gauge the two, so what's the point? I always want to position myself within favourable trading days, so a bank holiday is never going to be that. Worst case scenario, it does deliver. Best case scenario, you followed your rules and it's good. Again, orange folders. We've got some FOMC members speaking on Wednesday. However, that wouldn't really be too much interest to me. And then on the Thursday we have CPI. Obviously, that would be very, very sensitive due to the fact that inflation's been a problem within America. So if we see that inflation is easing, we would likely see a huge reaction in the market from that. And then on the Friday we have PPI. So again, same thing. I would expect Thursday and Friday to be the main drivers of liquidity, and I'd expect everything Monday to Wednesday to be pretty quiet. So that's pretty much everything I'm looking for. Just to summarise, I'm expecting no change in the dollar. I'm expecting this run and displacement higher to still, I'll just keep milking this higher and higher. So keep looking at this for higher dollar. Inversely, lower euro, lower GBP. Anything USD cross, I would look for higher. So USD JPY, I could potentially see this as being a shot to go again. But that's pretty much everything I'm looking for this week. So thank you very much for watching and have a safe week's trading.